Chinese Social Security Fund Risk Value Based on VaR Presentation. Shiyao, Center for Computational Finance and Economic Agents, University of Essex. Firstly, what I have done. The Chinese Social Security Fund, in short CSSF, is an important fund in China. It has an asset of $127 billion. In this research, we assess the risk in investments by CSSF based on the concept of value at risk. This research follows the general risk management procedure. Firstly, introduces and retrospects the investment behavior of the CSSF to do risk identification. Then mainly use VaR calculation method to do risk measurement. In the end, based on the work before, give risk control advices of investment behavior to Chinese Social Security Fund. Secondly, what my data source is. The data source comes from Great Wisdom Platform software, which is a stock market analysis software commonly used in China. I pick Social Security Fund Heavy Investment Index, in short SI Index, Shanghai Composite Index, in short SH Index, and Chinese Fund Heavy Investment Cynical Index, in short Fund Index. Indexes that exclusively compiled by Great Wisdom Company by PEG index calculation method as research material. In the study below, we use 1,110 trading days of the closing index prices in total, from January 5, 2009 to August 1, 2013. Third, what the technical merits are. From the technical aspect, this paper focuses on finding the best way to calculate VaR for CSSF. The first attempt to assess the VaR in CSSF is historical simulation method. It is based on the assumption that history will repeat itself in the immediate future. More precisely, the market variables are static. However, as shown in the picture, the market is essentially a non-stationary variable. So, I exclude the applicability of historical simulation. Then, I attempt to use a standard Monte Carlo simulation method. The premises is that the sample data should follow normal distribution, although the sample data does not follow that, as the picture shows the result of the return normality test. I still set this method as a comparison group to prove the superiority of the method I will cite then. In order to model the sample data more accurately, this paper finally attempts to draw into the GARCH-M model combined with Monte Carlo simulation to assess the VaR. This is the fitting model. The statistical tests I have done prove the GARCH-M model is good in fits. Furthermore, this paper gives backtests of the standard Monte Carlo method and GARCH Monte Carlo method. The backtesting enables us to quantify and evaluate all three methods. From the table, we can see the real failure days. GARCH Monte Carlo is doing better than standard Monte Carlo. Through all these steps, first, test the premises. Second, calculate the VaR for different methods. Third, backtests. Then I could safely get the conclusion that GARCH-M Monte Carlo is the best way to assess the data. Some people have done a lot of work on comparison of different methods on VaR, yet no one has compared different methods for assessing the VaR for CSSF's investment behavior. Therefore, no one knows what the best method is for assessing the VaR of CSSF's investment. Because different sample data may have different best method to evaluate, this paper attempts to discover the best method to evaluate the investment risk of CSSF. This enables to identify the most appropriate method for this purpose. In run, enable us to assess Chinese Social Security Fund's investment behavior and give investment suggestions. Fourth, what results I have obtained. By observing the volatility of return figure of Shanghai Composite Index, Social Security Index, and Fund Index, we can see that the overall trend of stock market investment return and Social Security Fund investment return are in accordance. It indicates that the overall market situation is playing an important role in influencing the return of Social Security Fund investment. As the table shows the ranking results of 3 indexes, compared to Chinese fund investors, the Chinese Social Security Fund investors' behavior is more risky in general, yet compared with the overall stock market investors was more conservative. SI's return is higher than the overall return of the fund and asset index and has a relatively modest degree of risk, although volatility is relatively large. We get the suggestion. From nearly 4 years of investment situation, the Social Security Fund investment performance overall is in good condition. It is recommended to maintain the original investment strategy.